The property market is on a bubble, and that is a global situation. People buy properties these days as if they're just buying a pair of jeans. Now, in this video, we shall talk about what drives a market bubble and how can you and I benefit from this bubble. Hello everyone, this is Ricey and welcome to my channel, The Quest for Wealth. First, let us define what creates a market bubble. A market bubble is normally created when prices of, certain assets surge up because of the irrational behavior of the investors or of the people who buy these assets. There is what we call an emotion called the FOMO, or the fear of missing out. So then there are people who will just stare at their screen and would see the market go up and up and up to infinity and beyond, and then they think that they have to participate in this market trading or in this property market. And then what they do is they take on debt or they leverage, take the money and invest it. That essentially is the major decision factor that they do. It's because there are people who buy on certain assets and they want to do the same, thinking that these assets are worth investing on, without truly evaluating what is the intrinsic value of that asset. So that is how a market bubble is created. Without any logical reasoning, it's more of the emotional behavior of people, and these emotional behaviors are what you call the greed and emotional behavior of fear. So greed is what happens when people buy on certain assets thinking that it is a very valuable assets because they are valuable assets, because people are buying those assets. They do not necessarily evaluate the value, the intrinsic value of that asset. So in this process, what happens when they buy and sell at this point, what happens is what you call loss. This is what you call loss. And that's what you call also the boom and the bust of the market cycle. Now, loss is something that we do not want, because we the primary reason that we invest is because we want to earn. We do not want to lose potentially, and that's why we have to always be in the know. Now, so then we identified or we defined what exactly drives the market to bubble. So in the property market, let us relate that in the property market. So then what drives the property market to go on a bubble, as it is already right now? What drives the property market to be on a bubble is really the law of demand and supply, or supply and demand. So the law says that if there is more demand on certain asset, and the supply is at this point, the supply is lower, then of course it is quite logical that the demand or the price is higher. But if it is the other way around, there is the supply and the demand is here, the cost will be lower. Now, in the situation or in the scenario that we are in globally, the mortgage rates are very, very low. The government had created or had imposed a very low mortgage rates, and the reason is because they want to lure and attract people to buy properties. And this idea, people tend to think that really it is to their advantage to take advantage of the low property mortgage rates. And when you come to really think of it, people would buy at $100,000 property, which is the actual intrinsic value of the property, but people would buy it for double that price, $200,000. And some people would even go on bidding war to have a property that is only worth $100,000 really. And the main reason, the main propeller to this whole scenario or whole Ragnarok of bidding and raising, surging property prices is because of the very low interest rates. Now, is it really to the benefit of the people who take advantage of the low interest rate? Is it really, do you really believe that if you buy a $100,000 property, which is the fair market value, the actual intrinsic value of the property, and you buy it for 200,000, and then the mortgage rate is low, do you really believe that is to your benefit? The what people think is that they can afford to pay the monthly mortgage of that property. They do not look at the actual value of the property. What they look at is what they will pay on a monthly basis, and that's how it is. That's the sadness of it. And if and when the market bursts, you lose your job, and you run out of the government sustenance, what happens then? It's the boom and the bust of the property market. Now, the second topic that we have to talk about is how do you prepare? How do we take advantage, or how do we benefit from the bust of this boom? One thing we have to identify now is that we don't know when the bust will happen. Even Nostradamus was not able to make this prediction. But what's important is to be ready. You have to be ready emotionally and financially when the bust happens, because when the property market bust happens, a property market that is valued at $100,000 will go at $75,000 or even $50,000, and that is the time to buy. If you are planning to go on the buying assets for rental income, for example, that is the perfect time to buy. If you are looking forward to buying a residence of yours, then the bust season is the perfect time to buy, because assets are on sale. But again, you have to be prepared mentally and emotionally and financially, most definitely. And you have to be established, of course, and you have already seen or planned what exactly are your long-term goals when you buy a property. Thank you very much, everyone, for watching this video. If you like it, please do consider to subscribe and like this video. Thank you.